Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm thrilled you're here. We're going to have a different topic today at today's interview. We're going to talk about mobile home park investing, which is something I know a lot about and like a lot. And so we're going to have a lot of fun today. So the gentleman we're interviewing, his name is Andrew Keel, and he is the CEO of Keel Team. Oh, that's cool. Kind of like SEAL Team. Love that. And he's in 2,000 lots. He's also in some self-storage, and we may talk about why he's not doing that anymore. And we're going to have some fun today. Welcome, brother.
Hey, thanks for having me.
Absolutely. So why don't you start the way we always start out and just give a little bit of your history, you know, where you came from, what you do before real estate, why real estate, and maybe the different asset class transitions you made.
Yeah. So I started out, as a sales manager selling marketing materials in Orlando.
Okay.
On the side, I started getting into
like you talking about like pens with names on them and crap
pens
like
with
that?
names on them, logo designs, website designs, and we
Gotcha.
specifically targeted realtors. And Keller Williams was like our main brokerage that went to all their conferences, the trade show booths, all that kind of stuff.
Well, listen, you're sitting in a coveted seat here. I interviewed Jay Papasan, who was a co-author of The One Thing with Gary Keller. So yeah, there you go.
Very cool.
Now, Keller Williams is an awesomely run organization. Sorry I interrupted. Please continue.
Yeah, no. Did that for 4 years. Had a good time on the side. I started fixing and flipping and wholesaling a little bit in Orlando. And through doing that, I sent out some yellow letters and got a response on 2 manufactured homes up in Ocala. And
So what he's talking about, guys, if you've never done any real estate, they call it yellow letters or bulky mail or all these crazy things that where you send something that is unusual and that grabs people's attention. So it's an actual letter on yellow paper is what he's talking about. Okay.
Exactly.
Right.
Exactly. So was flipping just a couple houses a year. Mm-hmm. Income was inconsistent, but it was like on the side of the sales gig. I got a lead on these 2 manufactured homes, and the guy wanted $2,200 cash. He had the titles. I didn't know anything about them. I just knew they had to cost more than $2,200 to build these things.
Right.
So I went up there and bought them.
Wow.
Came down and got on YouTube and typed in how to make money with mobile homes, and this guy named Lonnie Scruggs popped up.
Oh, good God.
Have you heard of that name?
Oh, my God. He's been around forever. Yeah, Lonnie Scruggs has been around a long time. So anyway, you read his book.
Read his book, Deals on Wheels.
Right.
And basically fixed these up a little bit and then sold them on contract to end buyers that were going to live in the
Leaving
parks.
them on the lots where they were?
Leaving them where they were.
Oh, so you got the 2,200 got you the lot too?
No. These were in a park.
Oh, they were in a park.
This was just for the homes.
Gotcha.
I had 2 titles.
Gotcha.
$1,100 a piece to buy these homes, and I cleaned them out a little bit. They were old and fixed them up very minimal,
right?
Like less than $500, and then put them on Craigslist. And the demand was just off the charts. It was like crazy. Like 25 people were like, "Here's my money," and I listed them for $2,500 down and $250 a month for 5 years.
Wow!
And the demand was just insane. So I went on to do like 19 more of those Lonnie deals.
Wow!
And that covered all my monthly expenses. It was just my wife and I at the time. We had a small little apartment, and I was able to then leave my day job because my expenses were covered. And I met a park owner in Ocala actually that kind of took me under his wing and was actually giving me homes to rehab and then to sell.
Wow.
Because he just wanted the lot rent, which at the time I was like, oh, this guy is not a very savvy investor.
Oh, yeah.
He's giving me the homes.
You've learned since then.
Yes. Yes. So I thought I had it made, and then he taught me about like syndicating and how you can raise money from investors. You don't have to have all the money yourself for the down payment and such. And I just went all in. I just literally stopped flipping houses and just dove into
to buying parks. Yeah,
that's right.
What size parks did you first buy? Just curious, how many lots?
My very first park was 67 lots.
Oh, that's good size. Most people they don't understand. You don't want to get under like 40 or 50 because you need a manager on site. Otherwise, you're the manager.
That's right.
So okay, so you got some good advice. Yeah, you learned under Frank and Dave. These are a couple of guys that teach people how to buy mobile home parks. Have been around forever. I even went to a couple of their boot camps myself, like we talked about before we started recording. And guys, there's a clue there. Okay, I wanted to learn mobile home parks. I've bought and sold more real estate than most people will ever sell in their lifetimes. And I went to a boot camp to learn what I wanted to learn. And you guys know my boot camp's coming up for multifamily. So if you want to learn multifamily, get your butt to my boot camp. If you DM me on any social and remind me, I'll get you in for $197. It's 3 days in Orlando, where Andy's from, and there's it's not a big sales pitch. So anyway, I just wanted to digress for a moment and mention that. But so you started buying parks. Did you do this by yourself, or did you team up with somebody?
Did it by myself, but I had mentors. I had the Frank and Dave boot camp, also a really nice gentleman in the Orlando area where I'm from, Ryan Smith of Elevation Capital, kind of took me under his wing and helped me, get on my journey to kind of identify the first park and things like that. But it was. There
you go, and you're off to the races. So, it's hard for me not to just spout what I know here, because I've learned so much, because I was going to do this. As I was telling you, I had 8 virtual assistants literally map out pretty much every mobile home park in the country. And I'll see the thing of it is with mobile home parks is a lot of them are misclassified on the county records. And so what I'd do is I'd have these VAs, virtual assistants in the Philippines, actually. And they would go on Google Earth, and we used an overlay that showed who the owners were if they circled over a particular asset, and they would find mobile home parks that weren't classified. So we found deals nobody knew about. And just as an aside, I was paying 6 of them $1.93 an hour each, full time. So I had 6 people working for under $12 an hour. True story. And I wasn't taking advantage of them. They were happy to get it. But, but mobile home parks is kind of its own little world. And so let's start with how you found them. Did you do the same thing, or what did you do to find deals?
Very similar thing. Yeah. So Frank and Dave, as part of the boot camp, they give you a list of, 44,000 mobile home parks, and we just skip traced them and
you did? Okay, because that's a real picked over list. So you skip traced them to find who the current ownership was. Got it. Yep. That was smart.
Yeah, and then we just started cold calling, and that's the same thing with when we got into storage, is just cold calling, and all of our stuff has been bought off market.
So you personally doing the cold calling?
Not at this point. We have a team of 4 people, but back then it was me. Yeah.
So you've got a team of people still doing cold calling?
That's right.
Okay.
Yep. 4 people part-time.
Give me the pitch.
So that's good. So the first question we ask is we assume that we know the person. So we'll be like, "Hey, Rod," and then the guy, the seller would be like, "Hello, yes," like thinking it's an old friend or something. And we say, "Hey, I'm calling about that mobile home park over there on 123 Main Street," and they say, "Okay, yes." You say, "Yeah, would you be interested in hearing an offer for that?" And then they would say, "Oh no, I'm not interested in selling."
Right.
We're like, "You're not at least open to hearing an offer?" And then they would, you just kind of bait them into it. And they say, no, I'm not interested. And then you just go right into the questions that you need to get the offer. So you say, okay, well, how many lots do you have? Oh, it's 51 lots. And you say, and then you confirm, because our CRM pulls it up on Google. Right. Say, is this the one that's right across? Just want to confirm this is the right one. This is the one across from the Taco Bell over there on Main Street.
Which makes them think you drove by it.
Exactly.
Right.
And then you confirm it. And then you start asking, okay, and how's the utility set up? Is it public or private?
Right.
Okay. And then,
by the way, that's the biggest question, probably the most important question when you're buying a mobile home park.
It definitely
the utilities.
Is.
Yeah,
yeah, because the utilities, it can get.
I've
expensive.
seen everything. I've seen ponds. Those ponds. I'm sure
lagoon,
you have too.
Ponds,
the lagoons. Yeah, all the crap goes into this lagoon. Yeah, true story. And you do not want to mess with those. And and even the sewer plants. Sewage plants. If one of those goes out, it can be $1 million in some cases.
Easily.
Right. Yeah.
Yeah.
So. There's some pitfalls, and we're going to talk about that a little more. I'm bumping ahead. So that's kind of the pitch, and then how do you close? What's the pitch close? What's the final comment?
Yeah, so we'll make them a quick value.
Right.
You say, hey, what's lot rent? We'll do our little equation and say, okay, well, it looks like we walk them through. Okay, you're bringing in this much per month, this much annually. Typically it's around 35%.
And they haven't hung up by this point.
Typically, we're just baiting them, keeping them on. People are trying to just be nice and listen to you. But yeah, then we give them a value, and typically they're like, oh no, I'm nowhere near that, and you just fire back real quick, like, okay, what number would work? And then we just try to start a combo.
No kidding.
And see what happens.
Wow. So, and I'm sure you pay them hourly, and then you spiff them if they get an appointment.
That's right. Yeah. They get an appointment, or they get a deal that closes. And then those would be the cold callers, and they would funnel it up to the closers as a warm lead.
You have more than one closer?
We do. We have 2.
2 closers. Wow,
Yeah.
that's high volume for.
And the reason is because we have a whole wholesaling wing that we wholesale storage and mobile home parks as well, and that kind of helps fuel the funnel.
Gotcha. Interesting. And this is all in Orlando? Do you actually have an office where they work, or are they virtual?
They're all virtual.
They're all virtual. Yep. Okay. The reason I'm asking is I'm actually thinking about doing something similar myself. I'm thinking about doing a peripheral business off to the side, and I've been debating a sales team for it. But I look at Grant Cardone, I look at people like Ryan Panetta, and they've got it all in-house. So they got, bells they ring, and they got boards, and they got contests and all that stuff. And so I was wondering if you could be very effective virtually. So sorry, I'm going to digress here for a minute, guys. Just humor me, because this is for my own edification. How do you hold them accountable for the calls? How do you motivate them? How do you keep that a culture that makes sense on your sales team if they're all virtual?
Yeah. So the first thing is the call tracking. We use smartphone, and then we have a smart dialer that
dials for them.
We'll dial for them. So we keep track of the call numbers. We have a sales manager that's doing twice weekly meetings where they're getting training. We're listening to their calls and giving them feedback.
Okay.
But yeah, and
then contests and stuff like that.
There's contests and different scenarios that we kind of incentivize and things like that.
So that's how you find them. So let's talk about the challenges with mobile home parks. I alluded to the big one, but let's elaborate on that one, and please tell us about challenges.
Yeah, so I think the private utilities is something we stay away from. Well water.
Really, you won't even do it. Yeah, so like well water and a septic system, because if that well goes out, you are effed, okay?
You got no water.
Right.
Yeah.
I remember when we were talking about my friend Kevin Bupp, who's one of my best friends, and he does mobile home parks in a big way as well. And he did do some private, but he would always price out connecting to public.
Connecting in.
Yeah. And so you don't even mess with private. If it's not public, you're not interested.
Exactly. And right now there's so many mobile home parks out there that are owned by mom and pops. Like 70% of mobile home parks are still owned by mom and pops that own one asset.
Wow.
So when we're targeting, these people, we're targeting public utilities because we don't want to mess with it. There's liability too. You got to get chlorine reads every day, and if your person isn't doing that, you could potentially poison an entire community,
or the whole community gets shut down, Yeah, and then where are you? Yeah. So so just public utilities. Anything else as far as a pitfall that someone should avoid if they're ever thinking about doing this for a business?
Yeah, I think you touched on one is size. Size matters. The more you have, you're gonna have more scale, and your expenses are gonna be lower. Due diligence is so important. When I took the Frank and Dave boot camp, they give you this book. It's like the 30-day due diligence handbook, and there's like 50 checklist items. Our due diligence checklist now is over 350 items long.
Yeah, no, because their stuff was so cursory. Yeah, I don't want to slam them, but it was very cursory. I remember. Yeah, and due diligence is critical. Even in our multifamily space, we've got these huge due diligence checklists, and you've got to kick over all the rocks, man.
Yeah, and you learn stuff. I'm sure from every deal, you've probably picked up something. Just we have.
We're always adding things,
and it's scary because we've made mistakes. One of the mistakes we made was.
Oh, let's take here. I want a doozy. Give us some mistakes.
This is on my 3rd mobile home park I ever bought. We were bringing in 20 brand new homes to fill vacant lots that were there.
Right.
And this is north of Memphis in a place called Covington, Tennessee.
I know it very well.
And long story short, there wasn't enough transformers. We got an electrician to go out and inspect all the pedestals. And he said, oh, yeah, everything's fine. Everything's good.
You didn't look at the main infrastructure.
But we didn't look at the main infrastructure.
Wow.
So these brand new homes, they have, they have higher
demand,
requirements than the older homes that were, 60 amp compared to the 20 amp or 200 amp now.
Right.
So long story short, we were having brownouts in these brand new homes and people weren't getting enough juice.
Wow.
So it was daisy chained. There was like 4 transformers for the whole park, and there was like 25 homes per transformer that the juice was running off. So we had to go, and typically the power company would pay for those and replace and add the new transformers. Well, this company would not, and we had to put them in and pay for that out of pocket, and we didn't raise that money. So we had to do a capital call.
How much?
It was $60,000.
Wow.
Which, at the end of the day.
So you syndicated that deal.
We did.
And you actually raised you had to do a capital call to the investors because you were skinny on it.
That's right. Wow. Back in 2018.
Wow.
So
there's a lot of capital calls happening right now. I will tell you.
Is.
Oh,
That's
big
right.
time. My attorney that we use, that my Warriors all use, a big attorney in Dallas, he said half his business right now is capital calls, forbearances, and foreclosures. Half.
Wow.
Yeah. So it's coming. That train's coming down the track. Well, the beautiful thing about mobile home parks is they're fairly immune from economic downturn because they're pretty much the bottom rung on the demographical scale, and you're not going to have people move out and find a cheaper place. Okay, so there is that. Let's continue with the disadvantages because I want to chat about the advantages because there's a big one and we both know what it is. But talk any more disadvantages that
I think home parks. A lot of people say, hey, the tenants own their homes.
Right.
This is going to be completely passive. It's going to be easy to manage, and that's just the farthest thing from the truth.
Right.
It is heavily affordable housing. It's management intensive, and there's also not like with the multifamily apartments. There's a lot of great third-party property managers that you can find.
Yeah, you don't find
in mobile home
parks.
parks.
There are really none. Maybe an A-class asset, like here in Florida, that's got 200 or 300 doors. Yeah, you could bring a management company, and most of those are vertically integrated though, because they can. But in the smaller stuff like you're talking about, no way.
Doesn't make sense.
So you're pretty much managing yourself. And I'm gonna tell you, I forgot to mention this. My brother Al, he works with Kevin and manages his parks. He owns several parks. But the reason I knew about the size of these parks is he bought a 12 unit up in Tampa, and he said it was the bane of his existence. And big mistake. So don't buy a small mobile home park, please. At least 40, 50 units, ideally 50 plus. Is that's your number?
That's our criteria.
50. Okay, yeah. Yep. So any other challenges, or can we move on to the advantages?
Let's move on to the advantages.
All right, so the advantages. So what's the biggest advantage?
I think it's the supply constraint, where like they're not there's more mobile home parks torn down every year than there are new ones being built by a long shot.
Nobody wants a mobile home park in their backyard. So nobody. I don't care who you are. That's not the one I was looking for.
Okay.
The one I was looking for is if someone does not pay you their lot rent, they have to move their home.
That's right.
What does that cost?
Oh yeah, around $5,000.
$5,000 just to move their home. So if they can't afford to pay you their $200, $300, $400, $500 in lot rent, how the hell are they going to come up with $5,000 to move the home? So they will typically leave, and then you resell the home to a somebody. Correct? Am I speaking out of turn here?
Yeah, you can file for abandonment and get the title to their home. That's right.
You end up owning the home, and so that's one of the big advantages. And people somebody will listen to this and say, "You freaking sharks!" And it's business. It is what it is. When I hate evicting people, but it's part of business, and it's sad, but it happens.
And it's not a win, right? It's not a win when we have to evict someone.
Oh, no, it's a pain in the butt.
We work with
and that place is probably trashed. You got to put a lot of money into it.
Oh, totally.
These things don't hold up like an apartment complex or apartment community.
That's right.
I mean, the walls are paper thin,
That's right.
floors are paper thin, the
windows are different sizes.
Yeah,
you have
it's
to special order them.
It's hard to find windows, doors, cabinets. Everything is different, and it's hard to find that stuff, and it's a pain.
And that's a great reason that a lot of people don't realize. Because some of these guys are like, oh, I can get this thing to cash flow so much because I'll just keep owning all the units,
right?
And I'll have all park-owned homes.
Oh yeah. So hold on. Let me elaborate on what you're saying. So guys, there's two scenarios here. One is you just lot rent. So everybody that comes in there owns their home. The other scenario is you own the homes and rent them out like you would a house or an apartment. Don't do that. Okay, tell them why.
That's exactly right.
Tell them why.
Because the repairs and maintenance expenses are higher than they would be on an apartment complex or otherwise. Because if you're running it like a flat apartment complex, you're going to have repairs and maintenance. You're going to be in these units all the time, and that's what you don't want.
Huge repair maintenance. Remember, this is the toughest demographic out there. Okay,
That's right.
This is the. I don't want to belabor it. I mean,
it's affordable housing.
It's
right?
okay. I would say it's a rung below that personally, but I mean, there's a lot of I'm not gonna say ton of crime, but it's a tough crowd. You mess with me, you mess with the whole trailer park, right? Anyway, but other advantages, like you said, are they're not building them anymore. So if you can find them and you've got that, they're fairly well locked in on the rent if you're not too aggressive, with raising it. They're still getting a better deal than likely get anywhere else.
Right.
You allow them to buy the home on terms. They buy the home on terms, and then once they've paid it off, then they're only paying the lot rent. And I would guess that reduces, collection issues and eviction issues. Would that be an accurate statement?
Totally.
Okay, because I've never operated one. I've dug into it in a big way, but I never actually pulled the trigger. So
when the tenants own their homes,
right,
the annual turnover is typically 5%.
That's it. Okay.
But if you got the park-owned homes and they're like, making payments towards it, you're going to have a more, 50% turnover
and
rate.
tons of maintenance costs.
Tons of maintenance costs.
They're really tough on them. Yeah, and
sorry to cut you off, Barry.
Yeah.
Another advantage is the financing. There's Fannie Mae and Freddie Mac are in the space, and they have requirements where they want the parks to have 25% or less park-owned homes. So that's another reason why, if you want the best-in-class financing terms,
you buy the really nice parks like that. I know they've got to have streets and curbs and some other things that Fannie requires.
That's right.
From what I remember, and I suppose another disadvantage or challenge, potential challenge. I don't know if this ever happened to you, where a competing park will offer to buy people out of their homes and steal the homes.
Yes.
Okay.
Yeah, that happens. Sparingly. It's only happened to us once.
Oh, I see.
And I won't mention. It was a bigger group
that
was doing that. But that can happen where they try to poach your homes and pull them over to their place.
Right.
But it's a two-way street, right?
Well, yeah, you're going to reciprocate.
And it doesn't lead down a good path, right? So
right.
usually we just have a gentleman's agreement. Hey, let's just stay out of my park, I'll stay out of yours.
Right. Okay. Talk about the value add piece in a mobile home park. So, we know what it is in multifamily, and I don't. So I want you to speak to where it's similar and where it isn't. Like in multifamily, any increase to the net operating income is an exponential increase to the value. Same thing.
Same thing.
Same. Okay. So when you go in and buy a park, talk about the process that you go through to increase the NOI.
Yeah, this is we only buy value add mobile home parks.
Good.
Occupancy is the easy one, right? You come in, the mom and pop owner has owned it for 30 years, and it's 65% occupied. You bring in homes to fill the vacant lots. That's the bread and butter.
So you actually bring in used or new?
Well, you typically do both.
You can
it
find
depends
used
on
still?
It's harder. It's definitely harder, but
Right.
in certain markets you can.
Okay.
Okay.
What markets are you in, just as an aside?
Secondary Midwestern markets is what
Okay.
we're targeting.
Gotcha.
So your
Okay.
Sioux Falls, South Dakotas, Des Moines, Iowas.
Wow.
Fort Wayne, Indianapolis, those type of markets.
Okay, gotcha.
But
so you go in, you fill up the empty lots.
fill up the vacant lots.
Can you make money on the new ones?
A lot of times you don't. You just
Okay.
break even.
Okay. But ultimately, once they're paid off or sold or whatever, then you're okay. But you got to get them in there to do it.
And there's financing programs. 21st
Buffett
mortgage,
owns the
things
big
like that.
one, right?
That's right. 21st Mortgage.
21st Mortgage, but not just the mortgage, the actual manufacturer. Is it to Franklin?
Clayton. Yeah, that's right. Clayton Homes is owned by Berkshire.
Right.
So that's the first piece would be
So you
infilling.
get the homes in, then what?
Rehabbing vacant homes is another big one.
Right. And that's common, guys. You'll be shocked. You buy a mobile home park, how many down units they may have because they're just completely destroyed. The owner's tired, doesn't want to screw with them. Holes in the floors, HVAC units missing, roof leaks, you name it, right?
Totally.
All of that.
Yeah. And, the owner, when he bought it, he was Mr. Fix-It. He was doing all the repairs himself. Now he's 74. He wants to retire, and he doesn't want to deal with it.
Right.
So one would go vacant, and he'd just leave it. But a lot of times you come in, and you spend $5-6 to fill a unit. You start getting your $350 a month lot rent, and now you just added $35,000-$40,000 to the value of the asset.
Right.
So it's worth it all day.
Let me explain the math to you guys. Okay. So let's say you increase. Let's say you increase $350. Let's say $350 a month times 12. To the bottom line, that's $4,200. What's an average cap rate on?
I'd say a 7 cap right now.
Okay, so divided by 0.07. So that's a $60,000 increase in value.
There'd be some expenses.
Okay, all right. 30 to 40 to 50. It's still a hell of a lot better than the $5,000
or $6,000.
Yeah,
to
exactly.
rehab it.
Right.
Yeah.
By the way, the thing I was looking for before we came on here was, and I took a picture of it because I couldn't get it to print, was Newmark just came up with their a multifamily housing cap rate analysis. Okay, this just came out, and I'll send it to you. You probably get it already, but so the average cap rate in 2016 was 7.46%. Okay. It dropped down in 2022 to 5.12. In 23, it's now 5.84.
For mobile home parks?
Mobile home parks.
Yeah.
Does that sound right? And it's trajecting back up because of the economy.
I think with those cap rates, they're looking at like the
high end stuff.
Yeah.
Because you're buying
stabilized.
Stuff. Yeah, you're talking stabilized Class A, B stuff. Okay, all right, fair enough. I wanted to ask you about it just because it happened to pop up, and I knew I was interviewing today. I'm like, shit, got to ask him about this. So So what cap rates do you think, that do you buy based on cap rates, returns, all the above? What do you buy based on?
We're looking at returns. So
Okay.
we're looking at like, hey, what is the cap rate going to be like end of year 3 after we've implemented our value add plan and sub-metered
So
water,
the
sewer,
purchase
things like
cap
that.
rate isn't as important as the pro forma cap rate.
It's really not.
Okay.
Yeah.
All right. And how much seller financing have you done on these deals?
Oh man, we just closed a $4 million loan, $4 million, 100% LTV loan on one of these 136 lot mobile home park just south of Nashville.
Wow.
So it is possible because again,
Wow.
you're dealing with mom and pops.
Wow. And they just wanted the cash flow.
He wanted the cash flow. He didn't want the management. And
How did he trust you to make the
I spent
payments
so
with
much
nothing
time.
down?
Oh, I spent a ton of time with him.
Okay, you became friends with him.
Him and I mean, I could call him right now. He wants to, hang out. Like
And guys, there's and I talk about this at my boot camp. And if you're going to do seller financing, how old is he?
74, 75.
Okay, there you go. If you're when you're targeting people, and I tell the mobile multifamily space, if you're going to do a mail people that have owned 20 plus years, right? Why? Because they're retirees. Number one. Number two, they're fully depreciated. There's no more tax write-offs. Number three, they're not going to take that money from that high-risk investment and put it into another high-risk investment. They just want cash flow in most cases. And so you want to have a conversation, something like this, Mr. and Mrs. Smith. Listen, I'm going to pay $4 million for your property. If I pay, if I got new debt and just paid you full, you'd end up with 65, 70 cents on the dollar. So here's what you'd get. Now, if you put that money in the bank, this is what your payment would be. Now, if you work with me, in your case, you did 100% finance, and I've done that too. But I'm going to give you enough of a down payment so I'm serious. Number one, I'm going to pay an interest rate that's fair, 5, 6, 7%, whatever the numbers work out to be. And you're only going to pay taxes on the amount you get from me every year. And your payment from me is going to be 3 times what you'd get at the bank. And it usually is. And I will tell you, if you meet a retired seller and you don't offer that, you're hurting them, okay? Not just yourself. You're crazy not to do it. And then the next piece is seller bonding, which is what we just talked about. When you're dealing with retirees, they're more interested in the relationship than the asset. So you bond with them, not to screw them, I'll hunt you down, but to create a win-win situation. That's a win-win for them, right?
100%.
Right.
Yes.
And so bonding is super important. You focus on the relationship, you bond with them, and you'll create incredible deals. I've done nothing down deals as well in the millions as well. And I've done deals where I didn't make a payment for a year because the property was so freaking trashed that I had to, and I didn't have a lot of money back then. I said, I got to put the money into the property. Reinvest. It was the truth. And they trusted me, and that was it because I bonded. So that's what you're talking about, correct?
That's 100% right.
Yeah.
And it's all about the bonding, building that rapport. But one thing you said, you're doing the seller a disservice if you don't offer this. Because a lot of people are like, dancing around it.
Right.
And it's like, no, you need to get it out there.
Right. Because they're going to get killed by taxes.
They are.
And at some point the rates are going to come back down and they're going to be suck at 1% or 0% interest again. And, and they could be, be the lender on the deal, getting a nice return, not getting killed by taxes every year. Hello. That's a
secured by the real estate.
Secured by the real estate that they know, love, and trust.
Yes.
Right. It's a no-brainer. So that definitely have that conversation if you're going to go direct to seller on deals, be it multifamily, mobile home parks, whatever it is.
And I think one of the big things also that we did is we said, hey, Mr. Seller, look at our budget. Look what we're going to do to this place.
Right.
We're going to take $1.5 million and we're going to reinvest it into this
instead of giving
place.
it to you, we're going to put it into this asset.
Yes.
Right? Okay.
We're going to redo all the roads. We're going to do
and you committed to that, I'm guessing, in the PSA. Okay, you committed to that, or did you just do that verbally? I mean,
that was verbally.
Wow.
He was a very handshake type of guy.
Wow.
But we're really doing it. We raised the money, like it's going to happen, and he was excited to see that.
Yeah.
He didn't want to have to do it himself.
They love it. They built it, or they've owned it forever. Yeah, they've got an emotional attachment.
Totally.
Yeah, love it. So self-storage. I know you've done some self-storage. I'm seeing headwinds big time on self-storage. Talk about that a little bit.
Oh, my black eye. I
Really?
mean, in 2021, we were like, hey, we're going to go into some self-storage, diversify, get into 2 asset classes. Ultimately, we thought it was going to be easier to manage.
Well,
right?
Sure seems easier
you look
to manage.
at it and you're like, okay.
You hose it out, you put their stuff up for auction, you hose it out, you're on to the next person.
But it's not the case.
Okay.
We underestimated expense ratios. We were buying like 30,000 net rentable square feet. Mom and pop owned facilities. Same thing in mobile home parks, buying them off market.
So what's the big expense? The utilities?
It's a lot of just, insurance,
Payroll.
taxes, the management, and marketing is the big one, actually.
Marketing,
And like
wow.
figuring out marketing and being able to be on the pricing,
be on it so you're competitive.
That's
Maybe
right.
You're
The
mystery
pricing,
shopping every week or
the
month.
promos,
Right.
exactly. And
Okay.
I think like just the turnover of like, hey, 10% of our tenants are going to move out every month, and we have to refill that every month. So it's like you
Holy
really
shit.
got to stay on that, and yeah, I mean, we were new to it. We made
Wow.
mistakes.
How many did you buy?
We bought 11
11.
self-storage
Wow.
facilities. Yeah.
You still have them?
They're up for sale right now.
They are. Yeah.
And
oh my God, terrible time to sell.
It's not a great time to sell, but we bought them.
You're
bought 'em
okay?
right.
You're okay?
We'll be
Yeah.
okay, and
Yeah.
the investors will be full. But
Do you have bridge debt or regular?
it's regular debt, so that all of our deals are bought with like local banks.
Okay, good,
5-year fixed,
Okay,
typically
good.
10-year balloons.
Okay.
But still, we didn't do great.
Yeah, I'll tell you. I told my team one of the big questions I want to ask on any deal that's for sale right now is why.
Why?
Okay. And like we've got an LOI on a deal right now, and I think we're doing another one today. My team's meeting on it right now, big one, here in Florida. And they have 3 months left until their loan resets.
Oh, wow.
They have to freaking sell. And so I was just talking about this on a previous interview today. It's going to be surety of close moving forward more than anything else. Pricing is not going to be as important. They need to know you can close. And I'm doing a fund. By the way, guys, if you're accredited, we're going to be doing an opportunity fund to capitalize on some of the incredible opportunity that's coming. I'm just going to tease that right now, but it'll be set up in the next week or two, and I will be addressing it and putting it out there because we need to get money together and get ready to take advantage of these assets that are coming, and they are coming. Trust me, they're coming. We're seeing it already. So I know that mobile home parks, manufactured home, trailer parks, quote unquote, they get a bad rap. They get a lot of bad press. Nobody wants them in their neighborhood, blah, 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 And so talk about that for a minute, because that's a common conversation.
Yeah, I think the same thing in multifamily, right? There's a couple bad eggs that can come in and make some moves that make everybody look bad, right?
Oh, an example would be the Wall Street Journal article about the guy in Houston, that one of my competitors' students that lost 3,000 plus doors and I think 100 million investor capital. That's a black guy for sure.
It is.
But I haven't seen anything recent in the mobile home park environment.
There's been some articles,
because
there's Wall Street money that's coming in and they're raising rents really fast on these people, they're not really doing anything.
I think Kevin even got hammered on one a while back. This has been years ago, but they made a poster child out of
Kevin,
him. I hate that shit.
But if you look at Kevin, like he's just like myself, we're investing in the properties and then we're raising the rents. We're not just coming in and saying, hey, you're $250 a month, we're going to $500 and nothing else changes.
Too bad, too sad.
Yeah,
right,
new owner. No,
right.
It's like, hey, we're going to redo the roads.
Right, and by the way, guys, that's what you do. You fix the place up before you hammer the rents. Even in multifamily, paint the outside, resurface the parking lot. Put in new landscaping, and then you start doing something with the rents. Right.
That's right.
Yeah,
that's exactly.
So there's been
right.
some bad press from these.
There's been some scenarios where people have raised rents really fast on people with fixed incomes and things like that without doing anything, and it gives everybody else a black eye. But I think all in all, there's a lot of operators. Most operators are doing it the right way. These are mobile home parks that haven't been reinvested in by the mom and pop owners in a long time, and there's a lot of deferred maintenance that needs to be fixed.
Right.
And if you come in and fix them, you can salvage that asset that otherwise could have got bought by a multifamily developer, and they say, hey, you got to move all your homes out.
Scrape all the homes and put something else
Highest and best use is now a apartment complex.
Very often it can be something else besides mobile home parks. And
that's right.
That's a very valid point. And, and there's a morality component to this. I was, and guys, I even hate to admit this publicly, so I'll probably get some hate and be like, you puss. But I was going to buy a sixplex here in Sarasota, and I went and viewed it, and the rents were about $1,000 a piece per unit, and they were $1,000 low.
Yeah.
And I met all the tenants, and I couldn't do it. I couldn't make 6 families move because they'd have to move to double the rents. And I know somebody else did, but I didn't have it in me to do it. And so, and I'll get somebody on the social on this thing. But you big pussy, you should have just, But anyway, I think you operate from integrity. That's our highest core value. You do what's right, even if it hurts. And, there's a right way and a wrong way to do things here. That deal only made sense if I doubled the rents, because it was a Marcus and Millichap deal, and they crank them as high as they can, and I backed out and I pissed them off too. But that's okay. It was just the right move. So, but you do the right thing.
There's a social responsibility
there is.
somewhere in
That's
all
right.
of this.
Absolutely, there is, and that's how you do it the right way. And I believe in that. And well, let's shift to something which is kind of cool about you, which is you have run how many Ironman, and talk about your athletic career here. Yeah.
Well, I played football in college, love working out, staying in shape. And I got a passion for triathlons, and I started at the sprint level and worked up, and I've now done 6 Ironman events. One was a full Ironman, and I've done 5 of the halves, the 70.3s.
Wow.
And I usually do 1 or 2 a year, and just it's a passion of mine.
You hear about hitting the wall when you're running it, where it's almost like you hit a brick wall and you're like, and it's mental. It's a mental game, right?
Exactly.
It's like the SEALs at Buds.
That's right.
Yeah.
That's right. And you noticed the Keel Team.
Oh, I know. I got that. I got that
name
instantly.
from the
Keel Team, SEAL Team. Love it. Yeah,
Yes.
That's cool.
But yeah, the biggest thing, and I know you're a big mindset guy, that I've taken away from the Ironman is literally like their whole motto is anything is possible. And I have that poster up in my bathroom, and I look at it every day. And really, if you put your mind to it, you'd make that decision. Like you said on a previous podcast, that's 85% of it right there.
It is. It's all mindset. Yeah. I love that. Anything is possible. That's their quote.
That's their quote. That's their
that.
brand.
I love
Yeah.
that. I mean, look at freaking Elon. Look what he's done.
Yeah.
Was it $4 billion startups? I mean, there's nothing you can't do, be, or have in this country. You just got to, you make a decision. You take that first step. You take massive freaking action. You play to your strengths. You get in a peer group that's going to help you. You maintain your focus, especially through the crap that's coming. Make sure you've got your goals done. If you're listening to this and you haven't done your goals, get your butt to rodslinks.com. At the bottom, I do a goal setting workshop every New Year's Day. It's got a guide you can download. I'm not going to try to sell you anything. People spend more time planning a freaking birthday party than they do designing their lives. That's designing your life. So go to Rod's Links and do my goal setting workshop. Do it 3 times a year, because your goals evolve. Because again, in what's coming, your focus is going to be critical, and you need to be focused on what you want, not the crap on the news. And it's all crap on the news. You don't even know what to believe anymore. It's so much crap. So, stay focused on what you want and why you want it, and you hone that focus. And this could be the greatest opportunity in your lifetime, what's coming. And I don't say that lightly. So, pick your vehicle, get up to speed as fast as you can, get connected with as many people as you can, and you could be setting yourself up and your kids up and their kids and their kids and their kids. That's how big a deal it could be. So, Andrew, I really appreciate you coming in here. This has been a lot of fun, and I know you drove a bit to get here from Orlando. It's a 2-hour run, but I'm grateful that you took the time to come. This has been a lot of fun, man.
This has been. Thank you so much for having me.
Absolutely. So one other quick thing. We encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now, again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.